Hey everyone, welcome back to yet another episode of Ying's Squawk Box. Yesterday we had a pep talk. We talked about that we're in the uptrend, we talked about we're back in a healthy market and it's going great. Today in the morning, I woke up and I got like 20 messages asking me about this AMC position. So I checked it out and it already went up like 7-8% right off the bat. And people start talking about selling the stock or even worse yet, short sell the stock. And I find that argument extremely dangerous and just completely preposterous. So I think this is going to be an interesting episode to talk about the hype that we have in AMC. Not to mention that I bought the stock at $3. Not to brag, but that's just the kind of trade that I do. A lot of people are asking me if they should buy the stock today. I don't know why you want to buy $40. Maybe you can sell it at $60 as an intraday trade. If you're that kind of people, good for you. You probably make some money. But your risk reward doesn't make sense, right? Number one, you're chasing into the high in from the $40. It could very well come back down to $30. You're putting an extra 10, 20 points risk for really no reason. And the trade today has no fundamental thesis. The trade from $3 has fundamental thesis. So that's going to be something very interesting right off the bat to not really negate some of the money that you could potentially make, but really just take a step back and question and put your argument in check. So with that being said, let's turn our attention to the chart. Right in front of me, you see this is the daily chart for AMC stock. Right now, the stock is extremely extended all the way into $70. Let's put a horizontal line. If today closes above $70, we'll be extremely lucky. But my guess is it will probably close below $70. And if you look at the high of the market, it's 72.62. And that's an extremely high price considering that this entire movement pretty much took a few days to complete. And this is what I meant. If you take a step back and look at the monthly chart, this is an extremely unlikely event that's happening to a relatively new company. Now, I'm not saying that AMC is a new company, right? It's a company been existing for a long time. But the stock that they're registering that's traded right now in the market, it pretty much started December 2nd, 2013. So that's going to be the beginning of the market. That's going to be when this name started to exist. Let's put a vertical line. Let's put a horizontal line. Boom. That's the cross that we're looking at. Okay, the cross we're looking at is $21 back in 2013. Most people don't really like this name. Some people chasing to the hype in the beginning of the IPO. They probably made some money. Stock come back down. They probably lost some money. And then they try to go again. Didn't hold. Let's put a vertical line. And this day, January 3rd, 2017, it's really when the stock trying to fail. And when I say fail, I'm talking about this entire movement making a lower low, lower high, lower low, and that's pretty much the bottom that we're going to see. So let's zoom in a little bit, look at weekly chart. This is kind of like the downtrend that we're talking about 2-3 years ago in this company. Apparently, this message is clear, right? Not many people like movie names, and this stock been consistently going down. I've always had this name on my radar, but I didn't really pay too much attention to movie names, right? You want to go with the big names, right? You want to go Apple, Facebook, you name it. So I have to admit that I didn't really start looking at this name until when pandemic happened. So COVID really happened late 19, around October and September. I probably received the message slightly earlier than the US market, and there's a little bit of advantage there. Family members in China, they are updating me with the news over there. The entire COVID situation started much earlier in China than in other countries. So that's kind of like a small edge I'm taking full advantage of because information is money. Information is key. When something like this happens, the bet is that it's going to spread to other countries. Okay, so immediately I start paying attention to movie companies. That's exactly against what the market reacts. And I'll tell you why. When COVID happened, we're starting to work from home. Obviously, movie theaters are closed. Why on earth would you buy movie stock, right? That's almost like a dumb question, right? No one pay attention to movie stocks. And that's exactly the time when I started to pay attention to this name. So pretty much late 2019, we're talking about September, October, the stock is around $8, $9. Let's put a horizontal line. That's kind of when I got started to looking at this name. Vertical line indicating the time, boom. It broke down, as you can probably see, from $8, $9 all the way to the low of this is $2. So let's put a horizontal line. That's the bottom. Now, I'm not saying that I know that's the bottom, right? I saw it happen, and then I used $2 as my reference point. I didn't know $2 it's the absolute bottom. Not yet. I did not know that. I saw this day happen in March 2020, and I thought maybe this could be a low point. So what do? You chose that point as a reference point. The stock go up and down. This point tried to go up to $6. Obviously, I missed that. Let's put a vertical line. And then it come back down a little bit to $4, go back up again to $7. Let's put another vertical line. And then it came all the way down to $2 again. Let's put a vertical line. This is a spot I start paying attention to, really looking at this company, AMC. And I believe I start buying around $2, $3. Let's put a trend line. That's indicating when I start buying. And then immediately I bought again, because here it came back down for a third time, right? When this $2 is holding up for a third time, that tells me someone on the buy side is stopping the stock from going below $2. Then that $2 has a significant signal to tell me that perhaps there's something interesting in the stock. Maybe there's a big buyer sitting at $2, preventing the stock price from coming down. That's the strength in the buy side that I would want to see in person as a money manager. Okay, so this day, let's put a vertical line. Guys, that's the buy spot, okay? Not $40 today, not $60, right? Don't chase high. That's the buy stop. That's precisely when I bought it, okay? Everything else is history. People are talking about taking advantage of this jump here, buying to $10, $12. Okay, $10, $12 is already too high. I'm looking at $2. Come on, guys. $10, $12 is too high. Look at this day. It opens up at $17, come all the way to $7. If you chase into high, that's kind of the risk that you're going to have to take, okay? You don't want that. And there are also some people think that they're smart. They're trying to short this. Maybe you made some money on this day if you're lucky, okay? But then some people also trying to short on this day and this day. And let me just tell you, part of the reason that the stock goes up from $20 to $70, it's because there's a short squeeze. And people are getting out of their short positions because they're losing money. So that's really what's going on here. It's a short episode, it hits a point, and I deliver the message. If you like the video, give it a like and click that subscribe button, and I'll see you in the next episode.